Hey guys, welcome back. As someone who's been investing and researching crypto for years, in this video I will share everything you need to know for free so you don't waste money on books or paid courses. Here's the thing, if I could go back and start all over again as a complete crypto beginner, there's only one strategy I'd use, and I'll be sharing that with you today. And no, it's not some secret get-rich-quick scheme. It's a simple, time-tested strategy that I wish I had known about from the start. And you will never find this info anywhere on the internet or YouTube. And trust me, it could have saved me a lot of headaches and bad decisions. Stick with me to the end, and I promise you'll walk away with a solid, stress-free approach to investing in crypto, even if you're starting with zero knowledge. Alright, let's dive in. Before we jump into the strategy itself, we need to set the stage. What exactly is cryptocurrency? You've probably heard of Bitcoin, Ethereum, and maybe even Dogecoin, but crypto is more than just digital money. At its core, cryptocurrency is built on blockchain technology. Now, I won't get too technical here, but think of the blockchain as a public ledger that records transactions across many computers. It's like having an open book where everyone can see the pages, but no one can tear them out or rewrite them. This is what makes crypto decentralized. No single entity controls it. But here's the catch. The crypto market is highly volatile. Prices swing up and down more drastically than in traditional markets. One day you could see Bitcoin surging, and the next day it's down by 10%. This volatility scares a lot of people away. But it's also why so many are drawn to crypto in the first place. There's a lot of potential upside, but it's crucial to understand that with great reward comes great risk. So why does crypto attract beginners? It's the accessibility. You can buy crypto 24/7, trade fractions of a coin, and access markets globally. But this accessibility also means it's easy to get swept up in the excitement. So before you start, remember that while it's thrilling, crypto requires a steady approach. So what's the strategy? It's called dollar cost averaging, or DCA. Let me break it down. DCA is a strategy where you invest a fixed amount of money at regular intervals, whether it's weekly, monthly, or even quarterly, no matter what's happening in the market. The idea is that over time, you'll buy crypto at both high and low prices, averaging out your cost of investment. Why is this important? It removes the emotional roller coaster of trying to time the market. A lot of beginners think they can predict when prices will go up or down. Spoiler alert, even the pros get it wrong. Timing the market is extremely difficult, especially in crypto. With DCA, you don't have to worry about whether Bitcoin is going to hit $70,000 again or drop to sub $30,000. You're simply investing at regular intervals, and over time, your average price smooths out the highs and lows. Let me give you an example. Let's say you decide to invest $100 every month into Bitcoin. By the time of making this video, Bitcoin's price is $62,000, so you buy 0.0016 Bitcoins. The next month, the price drops to $40,000, so now your $100 gets you 0.0025 Bitcoins. You're accumulating more Bitcoin as the price drops and less when it rises. By the end of the year, your average cost is somewhere in the middle. This approach is perfect for beginners because it removes the stress of constantly watching the market. And if you set it up on autopilot, many exchanges let you schedule recurring buys. This way, you're investing without even thinking about it. Now, where should you invest that DCA money? When you're just starting, I recommend sticking to blue-chip cryptos like Bitcoin and Ethereum. What do I mean by blue-chip cryptos? These are well-established, widely accepted cryptocurrencies with a proven track record. Bitcoin, often called digital gold, has been around for over a decade and is the most widely recognized cryptocurrency. Its value comes from its scarcity. There will only ever be 21 million Bitcoin, and its decentralized nature. Ethereum, on the other hand, is the second largest crypto and the backbone of decentralized finance, or DeFi. It's not just a currency, it's a platform for smart contracts and decentralized applications. Ethereum powers much of the innovation happening in the crypto space right now. But should you also invest in Solana? Solana network can sometimes get turned off whenever there's too much traffic. They're a bit centralized. Stick to Bitcoin instead. And why not jump into altcoins, you ask? Well, while it's tempting to chase the next 10x or 100x gains, most altcoins are extremely risky. Many don't have the same track record or use case that Bitcoin and Ethereum do. As a beginner, you want to reduce your risk by sticking to these two giants first. Once you've built confidence and experience, you can consider diversifying into other coins. Here's where most beginners slip up. falling for common pitfalls. FOMO, fear of missing out. This is probably the biggest trap. You see a coin skyrocketing and feel like you need to jump in before it's too late. But more often than not, by the time you hear about a coin's huge gains, the real opportunity has already passed. If you let FOMO drive your decisions, you're more likely to buy high and sell low. Scams and rug pulls. Unfortunately, the crypto space is filled with scams. A rug pull is when developers create a token, hype it up, and then disappear with all the investors' money. There are countless examples of this happening. Avoid projects that make outrageous promises or have anonymous teams. Stick with well-known projects that have a track record of transparency. Emotional investing. Crypto markets are highly emotional. Prices rise and fall based on news, rumors, and even tweets. Beginners often panic sell when prices drop or FOMO buy when prices rise. To avoid this, follow your DCA strategy. It removes emotions from the equation. Leverage trading. This is a huge no-go for beginners. Leverage trading allows you to borrow money to increase the size of your trades. While it can amplify profits, it can also amplify losses. Many beginners get burned by leverage trading, losing far more than they invested. My advice, stay away from leverage until you fully understand the risks. Next, let's talk about where to buy and store your crypto. Not all platforms are created equal, so it's important to choose one that is reputable and secure. Top exchanges for beginners. If you're just starting out, platforms like Coinbase, Binance, and Kraken are great choices. Coinbase is extremely beginner-friendly but has higher fees. Binance offers a wider selection of coins and lower fees, but it can be overwhelming for a first-timer. Kraken is another solid option with good security features. Security is everything. Once you start investing in crypto, securing it should be your top priority. Never leave large amounts of crypto on exchanges for extended periods. Use hardware wallets like number 1, Ledger Nano. These are popular hardware wallets that allow you to store your crypto offline, which is the safest option. The device connects to your computer or smartphone only when needed to make a transaction. Number 2, Trezor Model T or Trezor One. Another reputable hardware wallet brand that provides similar security features as Ledger. Trezor wallets are great for storing a variety of cryptocurrencies offline, keeping them away from potential online hacks. Hardware wallets keep your private keys stored offline, making it nearly impossible for hackers to access them remotely. They are ideal for long-term storage. Storing your crypto assets on a hardware wallet is like having a digital safe that's not connected to the internet, making it much harder for hackers to access your funds. Next are non-custodial hot wallets such as Trust Wallet, an easy-to-use mobile wallet that supports multiple blockchains and tokens, including Bitcoin, Ethereum, and many altcoins. Trust Wallet gives you control over your private keys and can be used for DeFi and NFTs as well. Unlike exchanges, this wallet is non-custodial, meaning you fully control your private keys. However, since they are connected to the internet, they are not as secure as hardware wallets. To be on the safe side, do not store your private keys on iCloud or email. You can also store your crypto assets on decentralized finance or DeFi, such as MetaMask. A browser-based wallet commonly used in the DeFi space, MetaMask supports Ethereum and Ethereum-based tokens. You control the private keys, and it integrates with decentralized applications or DApps for managing tokens and interacting with DeFi protocols. Key reminders for beginners. Back up your keys. Always make multiple backups of your private keys and store them in a secure place. For example, in a safe or a secure cloud service like Google Drive with encryption. Beware of phishing attacks. Even with non-custodial wallets, your private keys and seed phrases are crucial. Never share them online or with anyone else. Stay updated. Security threats evolve, so it's important to stay informed about best practices for storing and protecting your crypto assets. Also, make sure you enable two-factor authentication or 2FA on your exchange accounts and use strong passwords. But one of the most important things you need to succeed in crypto is a long-term mindset. Crypto market is volatile, and there will be times when your portfolio drops in value. But here's the thing. Over the long term, crypto has historically gone up. Bitcoin, for example, has had multiple crashes, only to recover and reach new highs. If you're constantly watching the short-term price movements, you'll drive yourself crazy. Instead, focus on your long-term goal, whether that's 5, 10, or 20 years down the road. Because DCA works best when you stick to the plan and ignore the short-term noise. Crypto is a fast-moving space, and things are constantly evolving. As a beginner, it's important to keep learning. Staying updated. Follow reputable news sources like CoinDesk, this channel, or Watcher Guru. They cover the latest developments in the crypto space. Here's the main deal: study beyond investing. Don't just focus on price speculation. Take the time to learn about other aspects of crypto, like how decentralized finance or DeFi works, what non-fungible tokens or NFTs are, and the technology behind smart contracts. The more you understand the broader crypto ecosystem, the better equipped you'll be to make informed investment decisions. It also helps you spot opportunities that others might miss. Regulation and taxes. One aspect of crypto that beginners often overlook is regulation. Crypto regulations are still evolving, and it's important to understand how your country treats cryptocurrencies in terms of legality and taxation. In many places, you're required to pay taxes on your crypto gains, so it's worth looking into tools like CoinTracker or Coinly to track your transactions and make tax reporting easier. Crypto is not just a get-rich-quick game. It's a rapidly growing field of technology and finance, and learning about it will set you up for long-term success. So there you have it, the only strategy I would use if I were a complete crypto beginner. To recap, dollar cost averaging is your best friend. It helps you invest consistently without worrying about market timing. Focus on blue-chip cryptos like Bitcoin and Ethereum, which have a proven track record. Be aware of common pitfalls like FOMO, scams, and emotional investing. Use reputable platforms and prioritize security. Just don't forget to protect your investments with hardware wallets and 2FA. And finally, adopt a long-term mindset and commit to continuous learning. Crypto can be overwhelming, but with the right strategy, you can navigate the space confidently, even as a beginner. Happy investing, and see you in the next video.